Bill, welcome to our webinar this morning. Thank you very much for joining us for our Demo Day Wednesday. Those of you that haven't joined us before for Demo Day Wednesday, welcome. As the name suggests, we do a demo every Wednesday morning. We try and introduce you to a different part of our tech stack. So today I've got the pleasure of introducing you to FE Analytics, which is quite a critical part of our Nexus ecosystem. So we'll be really getting into the weeds of that over the next hour. I'm David Scholes, I'm Director of Wealth Sales. So I'll be walking you through this today. In terms of an agenda, it's a big application, so there's a lot to talk about, but we're going to take a step back initially. We like doing this on webinars to explain what we mean by Nexus. You've probably heard us talk about Nexus a lot over the last year. We're gradually building out this very large ecosystem, this kind of full-blooded tech stack that does everything the advisor needs. So we're talking about Nexus and where FE Analytics sits within that Nexus ecosystem. And then we'll be talking about the 3 R's of analytics. Research. At the heart of analytics is very much a big old database of 300,000 funds and 1,500 MPS, thousands of sectors, indices, etc. So we'll be talking about how analytics provides you a portal into that database. Then we're talking about the reporting. How can I, as a user of analytics, take all of that data and spin up various different bits of content? Annual reports and portfolio comparisons being two of many we'll have a look at. And the third are risk profiling. Analytics has got a really sophisticated risk profiling process built through it that you're welcome to use. We'll start off with an ATRQ, gives you a risk score, and then gives you all of the different investment solutions you use, obviously tethers to the right one, and then produces a nice report at the very end. So we'll be talking about our risk profiling tool as well. And then a final one, integration. You can use Analytics islanded on its own, isolated from every other application if you want to. It's an incredibly useful tool with tons and tons of features, of which we'll be going through a lot of them today. But obviously, in this modern age, you get more than the sum of their parts if you can integrate as many different applications as possible. So you'll be happy to hear Analytics integrates with all of the different applications within the Nexus ecosystem already, which we'll be walking through today. But equally, it integrates with outside ecosystems as well. So if you're using a back office system, if you're using various different platforms, we can show you how you can integrate the two together and what that actually means, what data divide. So lots to cover off. Clearly, as we cover off these different things, there'll be lots of questions being asked. So you'll be happy to hear. I've got a couple of colleagues waiting in the wings. So if you've got any questions, feel free to ask as many as you like. If you've not used GoToWebinar before, the solution we're using here to broadcast this webinar, there's a little question box in the top right hand corner of your screen. Just click on that, ask as many questions as you like, and my colleagues will answer them dynamically throughout the session. And nice problem to have. If we have so many questions, they're just too busy and can't answer all of them during the webinar, we'll either get back to you on a one-to-one basis afterwards, or I'll jump on at the very end of this webinar and make sure we leave none unanswered. Super. Okay, cool. Let's get out of here. Let's go into our Nexus ecosystem quickly just to explain this. Okay, so as I said, I wanted to introduce you initially to Nexus. What is it? When we look out across the advisor industry, and when we have done for the last few years, we've noticed that there are so many different disciplines you have to master. You have to master ATR, and they're all very different to one another, right? There's not really that much significant overlap with them. You've got cash flow over here, you've got risk profiling, you've got platform due diligence, you've got pension switching, you've got research, you've got MPS analysis. I could go on, suitability reports, annual reviews, a long list of all these different things an advisor has to do. And we've always kind of taken it upon ourselves as a software provider to be the kind of the ones that aggregate all of those different disciplines together into one tech stack. So that is what Nexus is, and that is what Nexus is becoming. The idea that you have all of these different applications that are very closely tethered and bridged to one another, that will collectively do everything you need to do in that long list I just mentioned. And in this new world of AI, we've got this underlying kind of foundation of all these different applications that do just that. And now we can sprinkle AI on the top to leverage it in ways that we weren't able to do some years ago. So at the moment, what Nexus looks like, if we talk about that kind of foundation layer of all the applications, you've got analytics, which we'll obviously be covering off heavily today, that gives you the data, that gives you the platform due diligence and charge comparisons, and also that risk profiling journey as well. But equally, you've got FE Cash Calc, which analytics again is bridged to. We'll be covering that off again. So it gives you cash flow, gives you client portal, and gives you financial planning calculators. And now we've got Command Deck, which aggregates all of your client valuation data. So it gives you a full 360 view of your firm, down dashboards showing you the valuation of your business, how all the different advisors are operating, how much flows and money they're looking after. Gives you full-blooded reporting on money-weighted returns. We've always been great at doing time-weighted returns. We can now do money-weighted returns because we have the inflows and the outflows. All that data being given to us by the CRM and the platform. So that's our Nexus ecosystem, and obviously on top of that, as I said, we're now starting to build various different agents that do various different things, that take the data and the intelligence from this underlying layer and spin it up into various different things. What Nexus will end up looking like very, very soon. This is a bit of a sneak peek, hopefully mic drop moment early on in the webinar. This is what your logins will look like. So those of you that are already using some of our applications, Command Deck, CashCalc, FE Analytics, your logins will look like this in a matter of weeks. So when you log into those applications, you'll simply be presented with this screen. These are some of the AI agents that we're starting to build out now, but on the left-hand side, there are the individual applications. So I can dart very quickly into CashCalc, into FE Analytics, into Advisor Asset, into my Nexus AI note taker. So as I said, our webinars, we quite like to take a bit of a step back and say, look, although we're going to be focusing heavily today on FE Analytics, let's just quickly look at the broader picture. This is where analytics sits, and this is how it is integrated into those other elements of our ecosystem as well. Let's just close that down and let's get straight into analytics. So analytics, although I'm very conscious on these webinars that we have a lot of people watching that will know absolutely nothing about these tools, like in this case analytics, and there'll be a lot of you watching that are possibly almost coming up to Jedi Master level at FE Analytics. So I'm conscious of that. So my job today is to ensure that everyone walks away from this webinar having learned something, whether you're very new to the system or having used it for some time. So we'll start off with the real basics of the tool, how to navigate yourself around it, what is it, what does it do, etc. And then over the course of the webinar, we'll be trying to be looking at more and more sophisticated elements of the tool to cater for those of you that have used this for some time, hopefully show you some new tricks. Navigation, how to use analytics. So analytics is incredibly simple. I might be biased, but I think most people would agree once they're familiar enough with analytics, it is an incredible simple tool to use. You work and flow from left to right. Very simple 1, 2, 3 step process. On the left-hand side, this is where the data lives. What data do you want to look at? Do you want to look at funds? Do you want to look at sectors? Do you want to look at portfolios, MPS, indices, etc.? Your job is just to simply tell it, this is what I want to look at. And on the right-hand side, you then tell it what you want to do with that data. I want to take all the data I've just selected on the left-hand side and spin that up into a chart, a table, or some sort of report. And the third step is just generate it, then loads up the content you've requested. And the left and right hand side is almost detached from one another. It's not going to say no. There will be exceptions to that. There will be elements where it says, well, I can't do that. But for the most part, if you want to throw 1,000 funds into a table, go and find 1,000 funds and select table and load it up. It's never going to kind of try and debate the logic of what you're trying to do. Unless you try and put 1 million funds into a line chart, it might come back with a red warning and say, can't really do that. There's not really enough room. But that again will be the exception. So the limit really is your imagination. You know, what can you create on this system? And that's really what our job is, to try and give you some hints and tips of all the different things you could possibly look to create. So let's start off with something fairly simple. Let's look at some fund data. On the left hand side, if you click on the Instruments tab, all of our fund data, those 300,000 funds I was talking about, are divided into appropriate universes. Unit trust and OEICs, the standard ones, unit trust and OEICs, pensions, bonds, ETFs, etc. What type of fund do you want to have a look at? So I'm going to start off with unit trust and OEICs. Management group will load up. I can select Vanguard, and underneath Vanguard, you'll get all of their funds, including their life strategy range, probably one of the most popular range of funds in the UK at the moment. And if I click on add, I can add that to my active list on the left. Now, that's 3 or 4 clicks of a mouse. If I know the ISIN, City, CEDAW, MEX, any identifier of the fund, I could just pop the identifier in up here. I don't know whether it's a unit trust or it's structured as a pension fund or an ETF. Okay, that's fine. Just put the ISIN or City code or MEX code up here, and it will search for those 300,000 funds and find the fund you're looking for. Equally, Life Strategy is quite an obscure fund name, so I could have just simply typed Life Strategy in that search box, and it would have found all the funds with Life Strategy in the title, of which there are only a handful. So there are various different equally, you can save lists as well. So you will get to a stage where once you've been using analytics for a while, you'll realize you're trying to find the same stuff over and over. So I might have a centralized investment panel, and I've got a number of balance solutions that I like looking at time and time again. I don't want to have to log into analytics every morning and go manually find them. So if you go and add in, for if I go and add in a few of these LifeStrat funds, for example, just an example here. So 20, 40, 60, maybe they're 3 funds that I use time and time again. So I can save that as a list for future use. I can just simply click on save. I can call it something. I can even pop it into folders, just call it, just name a folder, and it will just pop it into that folder. If you've already got the folder set up, you can just browse it and pop it in there in that way. And once saved, it just simply means if I get rid of these, as if by magic, if I click on the open tab on the left, load all of these up. If I click on, I'm sure I've got a life strategy already. Here we go, LifeStrat. Did this back in November. So if I double click on that particular list, it will just simply recall that list and it will simply add them in on the left-hand side. So it would just save me time. And again, whether we're talking about 5 funds, or whether we're talking about 50 different solutions, it doesn't really matter. And there's all the solutions available. And now on the right-hand side, what do I want to do with that data? Well, I might want to throw that into start off with something simple, performance graph over a set period, say 5 years, and click on generate. And as I said, the moment you click on generate, it just simply smashes those 2 sides of the screen together. There are my 5 LifeStrat funds, and that's how they've performed over the last 5 years. Once I've created some content that I'm happy with, you click on PDF. That will always be PDF with your logo. But ultimately, if I don't want to show that to anyone, maybe I want to go again, these are pop-up windows. You just close them down, takes you back to the main screen, and we go again, and you create something else. It's worth pointing out on the right-hand side here under the performance period, certainly when it comes to charts, you can use a specified. So I could go back from a date to another. You don't have to do a generic time period. And equally, I can do multiple as well. If I want to do 1 year, 3 year, 5 year, 10 year, I can just keep on clicking that add period button, do 1 year, 3 year, 5 year, and maybe 10 year. And also base, I don't have to do this as a percentage figure. I could do this as a lump sum. Maybe the client's thinking about investing 100,000. So put 100,000 into that box. And if I click on generate chart, again, I've told the system I want to create different types of output, and it does exactly that. It still takes the same data set, the same 5 funds, and creates 4 different charts, all starting at 100,000 invested and what that's worth. And if you look at just quite small writing, but if you look at the underlying, so if you look at the underlying funds underneath the chart, you've got little brackets that shows you the exact value that asset is worth now after 1 year, 3 year, 5 year, and 10 year. So that hopefully gets you familiar with navigation. Everything I do in this demo, again, some exceptions, but the vast majority of things I do in this demo is going to be following that very basic motion, left to right. Find some data, find a feature, go and create some content. Before I move away from these individual funds, every single fund's got a fact sheet. Every single fund's got an alert icon as well. So again, if these are my favorite funds, I want to make sure that if there were any meaningful changes to these funds, like there was a charge change, or maybe the crown rating went up or down, or maybe the performance dipped by 10%, these are all the different ratings you can set up relatively quickly by just simply adding the alerts to the right-hand side. And then my email address is pre-populated down there, and any other one of those triggered will alert me. Now, one of the developments we released last year, incredibly exciting, was to surface more of our MPS data. We're going to get into the MPS directory in a minute, that allows you to pull the MPS model portfolios into analytics as a portfolio, so you can then start creating things with that data over on the right-hand side. Just as a start for 10 with the MPS data, though, on the left-hand side under the Instruments tab, I said we've got all of our solutions divided into their appropriate universes. If you scroll right the way down to the bottom, you've also got UK MPS. So anyone using analytics can click on UK MPS. There's all the MPS providers. I can scroll down to, we've pretty much got every single one of them, as you can see. If we go to maybe Quilter, Quilter WealthSelect, that's probably the most popular model portfolios if you base it on AUM. There's all the Quilter WealthSelect model portfolio solutions. There's quite a few of them. Let's just go and grab Active 5, add that across. And if I click on the little fact sheet icon next to it, whether I'm looking at a fund fact sheet, an equity fact sheet, again, we've got Tesla, Microsoft, Meta, etc., all of the core UK and US stocks. So whether I'm looking at an equity fact sheet, a fund fact sheet, an MPS fact sheet, it's kind of the same idea. It's just going to give you a ton of information about that investment solution. So this is an MPS. You'll see, again, just like a fund, an MPS has a crown rating. Because we've got MPS sectors as well, which we'll probably have a look at in a second. Every single MPS will have a charge and a DFM charge as well. So that's all illustrated in here. The objective of that MPS, the biography of the manager of that fund or MPS, again, it doesn't really matter. Provider documents as well. So if that provider provides us with additional documentation, provider fact sheets, KIDS documents, prospectus, annual reviews, etc. In terms of MPS world, fact sheets, rebalance reports, market commentary, etc. That one will be available in Analytics 2. You've also got a performance tab at the very top here. So this will show you the fund sector. Again, these are our sectors. They're based around the growth content, the equity content of the funds themselves. So blue is the fund, red is the sector, quartile information of that MPS against its sector and how volatile it's been, how risky it's been. And then finally breakdown as well. They're not the underlying holdings, they're embargoed, but we can have a look at the sector, look at the regional allocation, the asset allocation. You can see it's pretty detailed. But then also the growth and defensive split of that investment solution. Again, whether it's a fund or whether it's an MPS, it's the same sort of data. And then finally, I can click on summary fact sheet at the very top. Again, I might be recommending the client look at investing in the LifeStrat 40%, the Royal London governed portfolios, or in this case, the WealthSelect. Again, it really doesn't matter. Whatever investment solution you want to recommend to the client, you'll get the same type of format when you try and deliver these different types of reports to someone. It's a nice little one-page fact sheet showing me everything I want to know about that MPS solution. And if I come back to the main screen, on the right, over on the left-hand side over here to the right of instruments, you've also got sectors as well. So if I ever wanted to include any sector, a unit trust and OEIC sector, a MPS sector, a pension sector, they're all in here. So I said we've got the new MPS sectors, they're in here. So I can add those to my active list and start throwing those into charts and tables, etc. You've also got indices as well. I'll show you a popular index. Let's go and isolate one of these LifeStrat funds. Let's do 60%. And I might want to compare that against RPI. I might be trying to suggest to the client they'd be much better off investing into Vanguard LifeStrat because it's got much better chance over the coming years of performing better than inflation. So I can add in RPI, CPI, CPIX, RPIX. We've got all the different inflation measurements in here. We've also got Bank of England base rate as well. There are different measurements you can use for cash. But Bank of England base rates are arguably one of the best, so you can add that in as well. And you'll notice a lot of the index data goes back very far. So if I wanted to, you see this a lot online where people are creating long-term charts showing the S&P 500 versus cash, FTSE 100 versus RPI back to the 80s, or gold going back to the 70s. Again, all of that data is on analytics. All of those index data goes back to the 80s, the 70s, the 60s. I think the Dow Jones goes back to the 60s on analytics. So again, if I wanted to create some really long-term performance charts to really educate my clients about these different investment strategies we're employing, but I want to go back decades, you can do that with index data very easily. In this case, I'm comparing against a fund. So in fairness, I'm going to be limited. I can only go back to June 2011. I want to do 13510, again, 100,000 invested, and click on generate. You'll notice, just moving that to one side, all of the instruments on the left-hand side have a little colored square next to it. I can left click on that square and create a different color. That's why the other ones had all blue for Vanguard, because I wanted them to be all blue. So you can dictate the colors that are shown. But these are really nice. This is telling a story in itself. You can say, look, the longer the period of investing, as you'd expect, the more chance you have outperforming inflation. And that 10-year one's quite interesting. The bottom right, you can see, if you invested in cash over the last 10 years, 100,000's now worth. This is assuming you could have got the Bank of England base rate, which is going to be a struggle in itself. But had you have managed to get the base rate over the last 10 years, 100,000's now worth, what's that, 119? Need my glasses here. And then RPI is at 155. So you've lost 35 grand's worth of value because of inflation. The only thing that hasn't lost value on that chart is our investment solution, understandably, because over those long periods of time, those long arc of time, you'd expect it to do better than inflation and cash. Any way to kind of defend against inflation is to invest. Now, also on the right-hand side, you've got the ability to play around with these different investment strategies. So clearly, a lot of clients aren't just going to be investing lump sum on day one. They're going to be regularly putting money into these solutions. So under chart type, you can flip that to regular savings, regular withdrawals. So particularly if I'm looking at a client in drawdown, they've got a relatively large pension pot, and they're looking to draw down 4% a year, or maybe £10,000 a year, whatever the value is. So I can mimic that on analytics. We might take a look at CashCalc in a few moments, where you're taking today's situation and forecasting it. What analytics is very good at is taking today's situation and back testing it. So you can kind of get the best of both worlds if you use both. So over on the right hand side, I can say, look, over the last 10 years, let's do something a little different. Let's take away my indices and let's introduce someone's portfolio. So I'm going to get into in a few seconds how to build a portfolio and how to integrate it from a third party. But this is something a little different. My client's got an existing portfolio. Now, this could be a basket of funds. Maybe they're with Aviva. Maybe they're with Fidelity, you know, whatever platform they're on, and they've got maybe 10 funds that they may be invested in themselves, or maybe they're at some Hargreaves Lansdown. I can build that portfolio in analytics, and I'm saying to the client, look, you'd be much better off investing in this other investment solution because it meets the same level of risk as you should be taking. It's cheaper and it's better performing, yada, yada, yada. So we can now start creating lots of content to compare A versus B, where you are now, Mr. and Mrs. Client, versus where we're proposing. And on the right hand side, I can do a regular withdrawal chart because this client is looking at drawdown. We can say, look, the client's got an initial investment of 600,000 and they're looking to regularly withdraw £2,000 a month from it every month. And if you click on generate, it would do exactly that. So again, rather than looking at a lump sum chart, I call this kind of cash flow in reverse. I'm able to do this with cash flow when you're projecting forward. You've not, in most applications out there, you can't really do this looking backwards. It's one of the big USPs of the system. I can show a client, well, look, with our life strategy fund or with our MPS, with Brewin, whoever, you know, whatever you're recommending to the client, or maybe your own model portfolio that you've developed yourself, this is how my solution has performed, Mr. and Mrs. Client, over the last 10 years, taking £2,000 a month from it every single month. The underlying value of that investment has still grown to 882. So it's grown by nearly 300,000. Your current solution isn't taking enough risks. It's giving you the income you need, but it's eating into the underlying capital, and your underlying capital's dropped by about 37,000. And again, I can PDF that. Now I'm talking to maybe a younger client. The drawdown isn't relevant to them. They're talking about regularly investing into an ISA. So I want to talk about pound cost averaging, not pound cost ravaging. So again, different investment strategies need different charts. So on the right-hand side, you can flip that to regular saving. I can say, okay, well, initial investment is going to be a lot lower. Maybe they've got 100 grand in their GIA or ISA, whatever, and they're going to be regularly putting in £1,000 a month. And again, as I said, you can do this on cash flow. I can run this on cash cow. I can project over the next 10 or 20 years, but it's worth having both. This is what it could look like moving forward, but let's actually have a look at what it has done with real live data. Let's have a look at what that would have done over the last 10 years with an MPS, with a fund, with a blend. You can build whatever solution you like on here. We can show, we'll look over that. Again, that long arc of 10 years, you'll put in 220,000 in total. And at the very bottom there, Vanguard 373, Keith Baker 282. Over that period. And again, that's where the index data comes in so useful, because if I wanted to show them, you know, a basket of international equities like the MSCI World Index, again, I think that goes back to the 70s or 80s, I could apply exactly the same logic, investing £1,000 into a basket of global equities. This is what life looks like over a very long arc of time, 30, 40, 50 years. So that index data should never be ignored. The index data costs us as a company millions of pounds every year to license that index data. There's a huge amount of value in it if you can use it and spin it up into the content and help your clients understand kind of the impact of these different investment strategies that you're looking to employ. Let's just take a couple of minutes talking about portfolios here. So let's zoom in on Keith Baker. When I want to build a portfolio in analytics, I've looked at indices, I've looked at individual funds, but how do I build portfolios on analytics? Well, it's just portfolios, a new portfolio. You can click on this tab, and this is particularly useful if I've got a client that I've just met for the first time today. He or she has got a load of investments in A, B, and C, and I just want to build that portfolio on the fly. So on the left-hand side, similar to the main screen, I just need to select the universe, in this case, Unit Trust and OEICs, management group. Actually, let's just build a pension. Actually, it's still with Unit Trust and OEICs. Actually, no, I want to go to pension because it's to prove that we have got more than just Unit Trust and OEICs. Under the pension tab, so again, if the fund is a kind of an off-platform asset pension, there's all the different providers. Let's go and grab some of my friend's life. There's all of the, actually, I'll leave those for a bad example. Let's do Aviva. Aviva Life and Pension has got enough of those at the top. Hundreds of funds with Aviva. Again, this is off platform, so I can add all of the funds that my client currently invests in. Again, if I've got the ISIN code, the serial code, the city code, I can find those pretty easily searching for the code there. Once it's on the right-hand side, if you know it, unlikely you'll know they're waiting for a lot of them, so you can just type in the value. I know they've got that many pounds in that one, that many in that one, and it will automatically work out the percentage breakdown between them. And I can save that as Keith Baker's portfolio. Now, if you're recommending a portfolio, there might be a split between, as I said, we see this quite a lot where you might have 50% in a Brewin MPS and 50% in a multi-asset fund like LifeStrat. This is where you'd build it. On the left-hand side, go back to Unit Trust and OEICs, go to Life Strategy, if I spell that right. No, I haven't. Life Strategy. There's all the LifeStrat funds, add 60. give that maybe 50%, and under the portfolio tab, you'll have all of the MPS solutions you're enabled with. As I said, I'm going to touch upon the MPS directory in a few moments, but if I as a firm use Brewin, Tatton, and FE Investments, Brewin, Tatton, and FE Investment model portfolios will be available as a portfolio in my analytics account, as are LGT in mine. So I can go and click on LGT and add those to my portfolio. So my hybrid portfolio I've just built in the space of 30 seconds is 50% life strategy and 50% LGT balanced. And now I can save that as Keith Baker proposed portfolio. Incidentally, you can add additional charges as well. So when you build a portfolio in analytics, as with any other system, the charges are always baked into the fund price, meaning that you don't need to worry about what Vanguard Life Strategy charges in terms of the performance, because that's always taken into account. Whenever you look, it's just one of these good things about the industry. Whenever you look at any performance figure in the industry, it's always taken into account the fund charge. Never ever need to worry about that. Equally with model portfolios and analytics, if you're looking at LGT, Brewin, Tatton, any of the MPS solutions, it's not just taking into account the fund charge, it also takes into account their DFM fee as well. So again, never need to worry about that. Now, they're not the only charges you have to worry about though, because there's going to be a platform fee invariably. I'm recommending they go onto the Transact platform. Transact don't do their bit for free, and nor do I as the advisor. I want to charge them 0.8 because I'm going to be doing my bit as well. So there's these additional charges that analytics don't know about. So when that's true, you just got to click on the little settings tab at the very top here, and you can pop in the additional charge. My fee plus platform fee is just simply 1%. So I can make sure that all of that return, all the line charts I'm creating, all of the performance figures I'm aggregating off analytics will always now be net of fund charge, DFM fee, platform fee, and advisor fee, all of them, just by adding those additional ones. Or again, I've got a client that's done D2C, they've gone on Hargreaves Lansdown. Again, Hargreaves Lansdown don't do their bit for free, so you can just add in the charge of Keith Baker's portfolio, so you're definitely comparing apples with apples. And again, I can save that. Before I move on and show you some of the things you can create off the back of this, it's worth pointing out our integrations. So this is great, but what about if Keith Baker's portfolio already lives on IO, Xplan, Curo, Transact? Well, good news is we've got integrations with all of those platforms anyway. When it comes to MPS, it's not really that necessary because we've already got the MPS data hard-coded into analytics. You don't exactly need to bring that from a third party because it's already there. But if I've got Keith Baker with 10 funds in his portfolio that he's built himself, that happens to be on a third-party application outside of analytics, and great, pull it across rather than you having to manually build it. I'll just show you what that looks like. Hopefully they haven't turned me off. And IntelliFlow, I don't think they have. Here we go. This is my IntelliFlow account. I've set up with IntelliFlow to be able to show this integration. But again, it's exactly the way the integration works with IntelliFlow and analytics is almost identical to how the other applications work. So again, Curo, Xplan, IO, and quite a lot of the platforms now as well do exactly the same. So in this case, I'm going to grab someone like Keith Baker, click on all of the plans that I've got in IO. This is Aegon Stocks and Shares ISA. I just simply click on that button, click on FE Analytics and go. It uses not single sign-on, but it uses my the email address I'm logging in with IO and Analytics. So long as there's the same, it will pull the data across, which means that in the Analytics account, if I come to my portfolio tab, as if by magic, Blue Peter moment, it's already there. Keith Baker, Aegon ISA. So again, whether he's got 2 funds in his portfolio or 25, spending 2 minutes to 5 minutes on analytics building that is pointless. You might also just bring the data across from that third party directly into analytics, and now I can start doing things with it. What can you do with that data? Well, first and foremost, you'll see the portfolio. I've already spun it up into a couple of charts on the right hand side, but you'll see it's also got a fact sheet icon. Again, funds have fact sheets, MPS have fact sheets, sectors have fact sheets, portfolios have fact sheets as well. So whether your portfolio is an aggregation of 25 funds, or it's just an MPS and a multi-asset fund, or in this case, just 5 single manager funds, it will create a nice little fact sheet for you that will show you everything you need to know about that portfolio, a bit like a health check report. Look, Keith, this is where you are at the moment against a benchmark of our choice, as in your choice, the user. 1 year, 3 year, 5 year, that's the expense. There's the underlying holdings, how they've done, and their crown ratings and their asset allocation, regional split, sector split. There's the performance versus benchmark, and there's the contribution of the funds. So although your portfolio has done 20% over the last 3 years, how has it achieved 20%? Because 9% has come from that fund, 6.6 from that fund, etc. Now, any part of these reports can be tweaked, so you can change that chart to something else, and it will just simply refresh. And you can equally add little text at the very top as well, just to kind of create a bit of a summary, and then I can click on PDF and send that across to the client, again branded with my logo. As I said, importantly, now I can start comparing that against things that I'm recommending or things that I'm recommending the client move away from and to. If I just, on the right hand side, just one last chart to quickly show you is scatter chart. It's probably works slightly better if I load up all of those life strat funds again. I should never have got rid of them. Let's get those back onto the active list, because when you're looking at a scatter chart, it's going to look at performance versus risk. So it's quite useful if you show the other family of solutions, if there are a family of solutions. Again, if I'm using the Bruin balanced solution, it usually is wise to show the cautious and the defensive and the aggressive, and exactly the same with LifeStrat. So I'm going to drop Keith Baker's portfolio back into this, just to again show you how you change the color. I'm going to change his portfolio to red, and on the right hand side we'll just throw that into a 5-year scatter chart and generate. And again, I could have just done Keith Baker versus LifeStrat 60, but it doesn't really give me much reference point in terms of the other risk profiles. If I've run a risk profile with my client and he's come out as aggressive or adventurous, I want to show him where his portfolio sits against those other solutions. So again, it's a nice way of saying, look, these are the solutions that we're looking at. In terms of that family of solutions, we're recommending this one because that fits your risk profile, takes a suitable level of risk, takes a really good level of performance. Where you sit at the moment, Mr. or Mrs. Client, is well below where you need to be in terms of the risk. You're not taking anywhere near the level of risk you should be, and you're not therefore generating enough return either. And actually, you're taking the similar level of risk to our really cautious solution. So, and it could work exactly the same vice versa. That red dot could be somewhere up here. We could say, well, we have got solutions for you that do exactly that, but that's not the point. You've just told us you're super cautious, so you should be over here. You should be kind of sacrificing some decent return when the markets are strong, but equally, you're not going to be sacrificing huge losses when they take a turn for the worse. And PDS, so it's a really nice way, scatter charts, of kind of hopefully illustrating the difference in risk between the different solutions you're recommending. Keep mentioning the directory, the MPS directory. So on the left-hand side, if I as a firm, we find that most firms generally use between 1 and 3 DFM MPS providers. Again, Bruin, Tatton, FE Investment, to name 3 of many. If I want to run, research on the entire MPS database, I can do that via filtering. I can also go back to that instruments tab and just look at the MPS solutions individually and look at their fact sheets and set up alerts for them, etc. But on the left-hand side of the portfolio tools, you've also got MPS directory. And if you click on MPS directory, the purpose of this is it actually brings across the portfolio data. And I'll show you that in a minute. So these are all of the MPS providers on the system, the same that were being listed out on that universe a second ago. And if I go and pick on one that I haven't got not enabled with, let's say King & Jackson, if I go and load those guys up, it gives you a bit of a marketing spiel about who they are, what they do. And at the very bottom there, you can click on Activate Me and activate yourself for their model portfolios. Now, what does that mean in practice? Once you're enabled with that data, back on this main screen, if I get rid of all of this, if I get rid of my LifeStrat funds, I don't think I'll need those again. Under the portfolio tab, if I go and grab, let's just do LGT. Go and grab a balanced one. There it is, LGT balanced. Add that in. I'll just make that blue. If I open this up, if I just left click on it, you'll see that by pulling across the portfolio data, it now gives me full transparency of that particular MPS. Whereas before it was giving me some kind of rough numbers, charges, asset allocation, bit of performance against sector. I've now got a lot richer data by using the directory because I'm able to pull across all of the underlying holdings and what they invest into. But equally, I can go back in time. I can see what they're investing in back in 2009, etc. When they first started. But it also means that when I go and create any kind of performance figure, particularly on a line chart, if I just go and reset this back to percentage over 5 years. Again, this is a nice example where I've got a client. They've got Keith Baker pension. He's with his traditional portfolio, maybe a default fund that the Scottish Widows platform has picked for him. And now I'm recommending the LGT model portfolio, and I want to compare the two against one another using risk, but also looking at performance. And I'm suggesting he'd be much better off in the LGT balance solution. I can compare a full-blooded MPS solution versus his current solution, but you'll see that blue dot looks slightly different. It's got all those little dots on it. I can see how often they're making changes. So you're saying, look, this is the value of having an MPS, Mr. and Mrs. Client, is they're going to be making sure that every day that solution is balanced, because they're going to be rebalancing it to ensure that not only they're rebalancing with hopefully good performing funds, but equally rebalancing in a way that the asset allocation and the level of risk you're exposing yourself to is never more or less than a balanced investor, which is what your risk profile has told us. So that's why it's all dotty, a bit lumpy changes. Now, you can again take that content and spin it up into much more than just charts. So I mentioned at the very start of this webinar, we're going to be looking at reporting. We've kind of touched upon some of the reports, but on the right-hand side, there's actually a reporting tab. You've got the ability to do a portfolio comparison, which is really popular. So I can go and grab Keith Baker. That's my client's existing portfolio, and I want to throw that into my LGT balanced solution. And if I click on generate, up until now, I've created a load of individual charts. I've looked at a chart showing past performance over 5 years. Might want to then revert to a regular saving, regular withdrawal, then look at scatter chart. But this allows me to aggregate all of that into one report rather than having to decide which 3 or 4 charts to use. I've just got a nice template here, and I can now show this to the client. And we can say to the client, well, look, this is what you've currently got now, Mr. or Mrs. Client. These are your funds. This is how much you're being charged, and this is what we're recommending you move into the model portfolio solution with LGT, or our blend of LifeStrat and model portfolio, etc. And it's significantly cheaper. Give that a few seconds, but on a bit of a go slow. But a 5-year line chart will load up in a second. We were just technically looking at that already, showing the 5-year performance of X versus Y, then some performance figures, then some volatility figures. Oh, there we go. There's the performance. Good timing. There's the performance of, again, net of all fees, net of all charges. There's the LGT model versus my client's pension. That's how much risk it's taking, and we need it to be taking more risk. And how we're going to do that, we're going to completely change the asset allocation of what you invest in from the left to the right. So all of those different reasons why you're proposing they move across from one to the other is just neatly summarized in one report. And again, I can add some detail to that if I want. If I want a full-blooded report on just one of these, there's another really nice feature on the right-hand side that we always show called Custom Portfolio Report Builder, where you design your own report in here. I showed you the medium scan, the fact sheet of the portfolio a few moments ago, whereas on here I can design my own. Rather than just a template that I'm kind of forced to use, I can basically build my own template, and the template options are on the left. So I've got to decide if I'm going to create a 10-page report, what are those pages I want to include? I want the first page to look like that. It's going to show me performance of the portfolio. Wonderful. Over the second page, I want to look at all of the underlying holdings within the portfolio. That'd be quite nice. Add that across. I want to look at discrete data year on year. Yada, yada, yada. So I just can add as many of these as I like. Also, I don't have to with an MPS, but I might want to add all the fact sheets and the kids documents. So I'll include those too. And I can save that as my gold template. And once that's saved, it just means that back on this main screen, under template, all the templates that I've built are in there. I'm going to run that across maybe my, again, LGT or Keith Baker, doesn't really matter, but I'm going to run that on Keith Baker's pension. I'm going to title the report something. Maybe I want to title that Keith Baker Review 2026, put my advisor name in there. I can add a front page and a back page and a nice little glossary. So I can go to town here and say Keith Baker Review 2026, Dear Keith, and then start talking about inflation, gold price, market commentary, his risk profile. Again, I could do whatever I like, click on update. And once that's done, if I just click on the generate report button, it does exactly what you've requested. It takes the portfolio, it takes the report, and again, Blue Peter moment, it goes and creates a nice little review pack that shows you everything you want that client to see. Cover page, because I've requested it. Then it gives me that commentary that I've typed in myself, just a quick review. And this is what to look out for, Mr. and Mrs. Client. Again, I could get ChatGPT to do that for me. Then I've got a nice little performance graph of the portfolio versus benchmark. Then I've got the underlying holdings, looking at quartile information, discrete data, then looking at all the underlying holdings, the ratings and scatter charts, asset allocation, and all the diversification, and then all the fact sheets of each one of those funds underneath. So creating a report like that will take you a matter of seconds, particularly once you've designed it on the right hand side. All you're doing is just selecting a portfolio, selecting a template, clicking generate, and it goes and creates the content you need. Now, another thing to bear in mind when you're looking at analytics is charge comparisons. I mentioned at the very start about our Nexus ecosystem covering off all those different disciplines. 2 of the disciplines I mentioned was pension switching and platform due diligence. Pension switching, you can broaden that out to any kind of switch work. Okay, well, I need to switch someone's pension, but actually, you know what, I want to aggregate their ISAs and GIAs as well. So I want to do a consolidation switch. But any type of switch you're doing, you have to fully focus on the different charges and run obviously a full-blooded analysis of how much they're paying now versus what they're going to pay once they've moved across. So just on the left-hand side, you've got these platform analysis tools. Three of them: platform due diligence, consolidation, and charge. These two are basically identical to one another. Charge comparison is when you're trying to do basically a charge comparison without any seeding schemes. You're just simply trying to compare it across a number of platforms and pick the cheapest one. Consolidation is basically a charge comparison, but with seeding schemes. You need to compare seeding versus proposed. So I'm just going to do that because it's the slightly more sophisticated one. So I'm gonna. This is one I've already created before. So I'm going to click on Keith Baker. This is a 10-year analysis we're doing for Keith. These are his 3 seeding schemes he's got at the moment. I can add as many seeding schemes as I like. Again, cross wrapper. He's got 1 ISA and 2 pensions. When you add a seeding scheme, all you're doing is just simply adding what the value is and either what the charges are if you know them, or what the illustrations are. Basically, pop in the illustration details that you've received from the seeding scheme, the projection analysis. So you can pop those in as you do at the moment with any other tool. That's no different. And when you click on next, the next bit, now it knows what the seeding schemes are. It needs to know what you're recommending. So you can basically recommend any portfolio. You can import the analytics account into here. We've also got a number of DFMs hard coded on here as well, like Funhouse, but all of the portfolios in my account are now listed in here. And I'm going to do something super simple. I'm just a nice index balance, then MPS, and also the pension goes into that Funhouse model portfolio as well. Again, you can mix and match, you can create hybrids, you can be a lot more sophisticated than this, but for the purpose of this demo, let's keep it really simple. The ISA and the 2 pensions are just going to be smashed into Funhouse. Lucky Funhouse, they're going to get £1 million worth of assets. There's the projections. That's based on what I've put on the seeding scheme. And I can then drop in my advisor fee as well. It will know what my advisor fee is because I can hard code my charges in up here. And when I click on next, it takes an enormous amount of data to run this analysis that you're seeing here, which is why it takes probably about a minute, just under, to do this. It's now looking at every single platform in the industry. It knows what their tiered charging is. It knows whether Funhouse is available on those platforms. It's going to ignore it if it's not. It knows the subtle difference in charges with Funhouse across all platforms. So Funhouse, this Funhouse model might be charged at 34 basis points, and Aegon might be 35 with Quilter. So it knows that as well. And now it's trying to create a league table, which is the cheapest platform to use with all of that information. Now, if I'm an advisor that only uses 3 platforms this year, Aviva, Scottish Widows, and Fidelity, I can set up exclusions on here. So although this analysis, I've just run it across 20 different platforms, you don't have to do that. You can set up exclusions, and you can say, look, every single time I run any analysis on this system, only look at those 3 platforms, and a minute's worth of analysis will be cut down to about 10 seconds. It's a lot quicker, but I don't want to do that because then people will think, well, why you only got 3 platforms up here? I want to see all of them. So this is just to prove that you can do it across every single platform if you want. I can see Aegon Arc's the cheapest. Wonderful. I'm going to be a bit lazy and just pick the cheapest one, but if I click on select, it then runs the side-by-side analysis. It knows how much those seeding schemes are costing me. It now knows how much the proposed solution is costing if we go via ARC and consolidate all of those assets across wrapper onto one platform. And now, got a bit of a go slow here, but now it will compare the 2 side by side and look at the reduction yield across both of them and show that pound value as well. There we go. So it's saying, look, Mr. and Mrs. Klein, over the next 10 years, because that's how we wanted to project over, the drag on your current investments is 1.39. That's how much you're paying in charges. And therefore, the projected value over 10 years is going to be about 1.4 million, with our solution growing at 1.02%. Sorry, being dragged back by 1.02% with my advisor fee, my platform fee, and my solution cost. It's significantly cheaper, and therefore, if we both grow at the same value, 5%, our solution is going to be valued at 1.5 million, and the hurdle rate is basically, or the critical yield is 0.37. You need to be growing more than 3.7 against my solution, Mr. and Mrs. Klein, for this not to make economic sense. So my solutions are darn sight cheaper by aggregating all those assets onto the Aegon Arc platform into the Funhouse solution, and click on next. So that entire analysis has taken a matter of minutes, but I'm going to keep on stressing this. The amount of calculations in the background is enormous because it's looking at across every single platform, every tier charge, taking into account your charge, taking into account the subtle difference with the Funhouse models and their charges, etc., etc., and then trying to find the cheapest solution for you to consolidate across wrapper into one platform. When it comes to platform due diligence, quickly cover this off, running out of time here, but on the left-hand side, platform analysis tools, if you click on platform due dil, it's a very simple tool. You'd only really have to do this once a year, and once you've done it once, it's just a simple case of refreshing what you did the year before. But you can click on, this is the one I did last year, for example. If you want to start a brand new bit of research, just click on Start New. But if you, this is based on FCA Fact Sheet 12, how the FCA determined how you should be picking platforms. All of the bullet points on that fact sheet is basically a separate tab on here. So your job as the advisor firm, maybe at the start of the year, is to come on here and say, okay, for the platform that we're going to be using this year, we want to ensure that they offer these types of funds. These are must-have, nice-to-haves, not required. These are the fund lists I need them to have available. So I use, again, life strategy funds and maybe the FEI models. So I can tick on the solutions that I use to ensure that whatever platform I pick needs to have those solutions available. What tax wrappers do I need? What about the functionality that the platform actually offers? There's three or four tabs for that. The tools that they offer me as well. Do I want risk profiling, filtering functionality, etc.? What about DFM features, accessibility? What kind of support do they offer, etc., etc.? So it's probably a 10-15 minute job to really go through line by line, make sure they're correct, and then under the results tab, just click on next, and it will run that analysis for me. It now knows what my unique bespoke requirements are. It now knows it already knows what all the different platforms offer, and it's basically creating a due diligence report for me, a due diligence pack that proposes what platforms are best suited. So for this year, Transact has hit basically every single one of my must-haves and a good chunk of my nice-to-haves as well. It gives you kind of a star rating at the very bottom as well to show how Transact has hit every single one of yours. Again, this is bespoke to the bit of research I've just done now. And then at the very top, you can go forms of service, again, all the different fact sheet 12 recommendations, tax wrappers functionality, all of the research it's just done, and it's showing you which one has hit must-haves. And then finally, I'd click on PDF, and that will give me a 80 page report to determine why those platforms are now suitable for my centralized investment panel or retirement panel moving forward. So bear in mind, analytics hasn't always done platform due diligence. It's only been over the last 4 or 5 months we've added that. So a really good tool set over there, hidden away under platform analysis tools. So I was going to go through the risk profiling tool. I am running out of time, so I'm going to go do this very, very quickly. Under the portfolio tools tab, you've got something called the investment planner. I'll do that again because that's quite quick. Portfolio tools investment planner, which is that one. Investment planner loads up. I want to do a risk profile for Keith Baker. I've always said that the risk profile process consists of three different elements. You've got to create the plan initially, then you've got to do the ATRQ, and then you've got to find an investment solution. So it's a very simple process. To create the plan, you just need a name. This is Keith Baker ATRQ 2026. This is for his pension. And has he got an existing portfolio? Well, he does. We know he does because we've just been using it. If he doesn't, it doesn't matter. It doesn't really make a massive difference. It just changes the reporting at the very end ever so slightly. But I'm going to say, yes, he has an existing pension that I might have just pulled across from IO. So that's my plan saved. So that's the first bit done. Nice and easy. That's taken about 10 seconds. The next bit is the ATRQ. Now, I can email the ATRQ to the client. They can complete it themselves. Then the results are sent back to me. I can skip the ATRQ entirely because I don't agree with ATRQs. I just want a conversation around capacity, loss, knowledge, and experience. I'm just going to very quickly show you what the questionnaire looks like because I might want to do this in front of the client, maybe on a Zoom call or a Teams meeting. So there's 14 questions in total. 13 are basically risk-based questions. 14th one is investment term. What's the actual investment term of the client? So there's their medium term. And click on continue. So it takes all of that information, takes all of the information about the risk profile or the risk appetite of the client and the investment term, brings it together and says, well, based on that information, there's your starting pad, your risk profile, 3 out of 5. There's a risk explanation of what 3 out of 5 means. And there's the asset allocation, kind of a target asset allocation, strategic asset allocation you might want to think about working towards. Now, we've also just updated these. These are brilliant. These are perfect for capacity for loss, knowledge, and experience questions or conversation. I now need to discuss this with my client. I need them to understand what it means to be a risk profile 3, how much loss is inherent within that risk profile. So there is a ton of really useful data baked into this report. that shows you just that description of what a risk profile 3 is, and the asset allocation, again, portfolio journey, the amount of losses you could have made over the last 20 years by investing in that type of equity mix, possibility of losing set amounts in any given year. It's a huge amount of science. Typical annual return, high return, low return. So kind of what kind of growth rate we're kind of expecting over the next 5, 10, 15, 20 years compared to the old asset allocation before we changed it. We tend to do this every quarter. And then 1,000 different scenarios as well, and the probability of achieving certain amounts, and candlestick analysis at the very bottom. So if I need my client to understand how much loss and gain there is inherent within these risk profiles before we even select an investment solution, particularly around capacity for loss discussion, that's ideal, and that will be added to the final report anyway. But we still need to talk about capacity for loss knowledge and experience. So again, these are some kind of library questions you can ask them, and when they say yes or no to each one, you're documenting what they've said. Same knowledge and experience. So how you complete that knowledge and experience capacity for loss questions is entirely up to you. You don't have to do it here, but it's just your life is made a bit easier if you do. And then finally, the summary. Again, the computer thinks my client is a free medium. I've now had a lengthy conversation around capacity for loss knowledge and experience, and now the system allows me to deviate from the original response. If I don't think the client is a 3 out of 5 and the computer's got it wrong, and actually we think they should be 5 out of 5, then you can say, no, I want to adjust the score, and I think they should be a 5 out of 5 rather than a 3, or maybe a 1 out of 5 rather than a 3, and then I can explain the reasons for that here. But I'm going to be a bit lazy. I'm going to agree to it and say, yeah, absolutely fine. Me and my client both agree that they should be a 3 out of 5. That now locks the results. So I've done 2 out of my 3 things. So I've created the plan. I've done the ATR, and now I need to find an investment solution. Get rid of that. Oh, well, that's come up. And now I need to find an investment solution that is tethered to risk profile 3. So at the very bottom, if I click on suitable portfolios, it basically knows what my centralized investment or centralized retirement proposition is. So it will pull up all of the solutions that I use as part of that proposition, and it will basically signpost which one of them is a risk profile 3. So give that a few seconds. At the moment, it works off the FE risk score. We are actually designing this in our Nexus Wealth platform. So we're redesigning the risk profiling process, and it's probably going to be tethered to the equity content moving forward. So this is a change, a slight adjustment we're making to this. But give this a second or two. This might be my internet. We're going for 52 minutes now, so it might be close to giving up. Here we go. So these are all of the solutions that I use on a regular basis. It's telling me that if my client has just come out as a 3 medium, it's suggesting that I look at an investment solution that has a risk score, an FE risk score between 65 and 75. So I'm just looking down at the list of solutions that I use, and I can see quite clearly which one's more suitable. So again, I'm just going to be a bit lazy and just select that one solution, Vanguard LifeStrat 60. That's perfect for my client. Confirm selection, and that's me done. I've created the plan. I've done the ATR. We found an investment solution for the client, and now I need the system analytics to aggregate all of this into one nice report. There we go, just fly back to the end of this process. And every part of that process we've just covered off has its own individual little report, and I can open them up on the fly and take a look at them before I add them in. But they're fairly self-explanatory because they explain what they are here. So I want a cover page with my ATRQ. I want an attitude to risk report that explains details the ATRQ that the client has completed. I want those possibility losses report added in. We discussed how much risk is inherent within a risk profile 3 solution. I want a switch report that compares existing versus proposed solution. And because I'm recommending a fund, I want the fact sheets and the KIDS documents and maybe a little signature page at the very end. I don't know why the switching report's not loading up. Here we go. I'm going to cheat. There we go. I don't know why that's coming up with a little error. Here we go. So this is, again, Blue Peter moment. This is one I've done before. This is what it will look like. Cover page with my logo. There's the ATRQ. Questions and answers the client has completed. Come out with. They've come out as a 3 medium. Underneath that, there's capacity for loss knowledge and experience questions we completed. Then underneath that will be how the questionnaire conforms to the FCA good practice recommendations. So that's for your compliance. That's possibility losses. That's actually the old possibility losses reports. It's just a 1-pager in this case, but they've now been converted to 2. And probably the most important page, if I can zoom in for you, is switch report. So we're saying, look, Mr. and Mrs. Client, you've currently got your Keith Baker pension. We're recommending you move across to Vanguard, Bruin, Tatton, FEI, really doesn't matter what the proposed portfolio is, but we're proposing Vanguard because it sits at a 3 out of 5 where you need to be. At the moment, you're only a 2, where you need to be taking more risk. And let's have a look at the difference in the risk. The expense, let's zoom out a bit. Expense, that's the diversification differences. There's a difference in the performance, net of all charges, and there's a difference between the asset allocation as well and all the underlying holdings. And this is why we're recommending you switch from these funds into this one. So I've had to fly through that at some speed. But that's the risk profiling tool. And again, there's all these different features in analytics, and it's very much up to the user which one you want to use. If you're using a different risk profiling tool from a different application, fine, continue using that. And as you can see in analytics, you've got a ton of other features you can use that never touches the ATR. But from all the feedback we've had from advisors over the years is they want one system that does everything. So if you want to try and aggregate everything into one tool, that's why you have a very efficient ATR key process built into the heart of analytics. Just wanted to finish off by explaining how this kind of integrates to the the other applications within Nexus. So I'll give you a quick example of that. If I want to tie this into CashCalc, it links to CashCalc in 2 ways. First of all, with single sign-on, I'm logged into analytics, so I can quickly get myself into CashCalc just by clicking that button. And if I've got my CashCalc account set up, cash flow, it automatically puts me into here. I can then go and grab a client, say Keith Baker again. Click on Keith Baker. This is him and his wife. And I can click on the cash flow at the very top. This is a cash flow report or a bit of analysis I've already done for Keith. So I'm just going to load this one up and explain another way in which it links to analytics. So in analytics, if actually I'll explain this in a second. Under the savings pots, you'll see that Keith has got a £600,000 pension, and it's growing at 4.5% growth rate. Now, why is it growing at a 4.5% growth rate? Well, because I thought that's probably quite logical. It's I think a 45-50% equity content. 4.5 a year sounds about right. It's kind of gut instinct. But I've always said that's not really going to wash with the FCA or compliance when they come knocking and say, well, why did you suggest this client 10 years ago was going to grow at 4.5% every year? Well, because it kind of sounded about right. Need to use something a bit more logical than that, but maybe a bit more scientific. Because at the moment, it's creating a cash flow like this. It's that big dark bar is my client's pension. We're showing my client that over the years they're going to amass a load of assets that's going to roughly equate to about 890. Then they're going to hit drawdown. They're going to draw down those assets, and they're going to run out of assets by their early 90s, which is slightly worrying. If life expectancy late 80s, that doesn't give them much headroom, particularly to leave assets to loved ones either. Now, how does this link to analytics? Well, I've got Keith Baker's portfolio in analytics over here. Keith Baker, that one. And if I open him up, if I open up this portfolio, what about if I could use his portfolio in analytics to derive the growth rate? Rather than me having to guess a growth rate of 4.5%, what about if analytics can tell me? Well, that's exactly what we've done. So you can click on Export to CashCalc here, and it exports the asset allocation from analytics into CashCalc. And what that means is when I'm in CashCalc, I can go into my savings pot, and rather than selecting the 4.5% growth rate manually, I can just simply click on template. I can open that up. I can click on Keith Baker, and automatically it tells me what the growth rate is or should be, because it's looking at the asset allocation. It's got a growth rate assumption for every single different asset class going back 40 years, and it's aggregated that and giving you a bespoke growth rate. So you're about 1% out, Mr. or Mrs. User. 5.4 rather than 4.5%. That would be a much more logical growth rate to use if you focus on the last 40 years worth of growth assumptions on that particular asset allocation. And now if I come down to my cash flow model, suddenly it's completely changed the story. We're no longer running out of assets by our early 90s. We're running out of assets by our late 90s, which should give my client a bit more comfort. Now, equally, what I could do, again, really running out of time here, just one last thing, proposed solution. What you can also do, of course, is create a duplicate. And now I can come back to my savings part and say, well, this is great, but we still want you to move away from those assets because you're going to run out of assets entirely by the mid to late 90s. And actually, we think you should be hopefully passing away with assets to hand down to loved one. So if I go and find, I think I've got LGT in here. There we go, my LGT balanced. So we're going to use that instead. And now I've just very quickly created a comparison. So come down to my cash flow model. We think you should be taking more risk, Mr. and Mrs. Client. You shouldn't be cautious to moderate. You should be balanced or balanced or moderate. And now this is, compare them. So look, Mr. Mrs. Client, this is what life looks like with your portfolio with Keith Baker, running out of assets by the time you're late 90s, actually with something a little bit more adventurous. It's going to grow at maybe 1-2% a year, or it certainly has done over the last 40 years, grown at 1 or 2% more. That means you won't run out. That should certainly be able to cover any long-term care costs. But equally, if you don't go into long-term care, yada, 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 we've got a fairly significant chunk of assets to hand down to loved ones as well. So that's also, I could go on all day, as you can imagine. There's so many different ways analytics integrates with different third parties, particularly with our Nexus ecosystem. But I wanted to focus today's presentation primarily on analytics. The only other thing I would say that I've run out of time is it also integrates with our Nexus AI note taker. So this is a note taker that joins every single meeting of yours. It basically transcribes the meeting, and once it's transcribed the meeting, as the advisor, this is a meeting that was transcribed for me, for example. So it will very quickly spin up into meeting notes. So it'll explain what happened in the meeting and what information was gathered during that meeting and next steps, etc. Incidentally, all the information that it's managed to gain or glean, for example, the fact the client has an ISA or premium bonds, it can now take that data and push that directly into CashCalc. It's got an integration with CashCalc that does exactly that. It also allows you to spin up things like vulnerability assessments as well. So I've just had an hour meeting with this client. So the note taker will then create a vulnerability assessment to see if there was any obvious signs of vulnerability during that meeting, and it will give you a score at the very bottom. But also on the right-hand side, how this integrates to analytics, it can create portfolio scans. So actually, I want to create a medium scan of this client's portfolio that happens to be in analytics. So rather than going into analytics and creating that report, I can create it on the fly in here. That's 11 o'clock. I've run out of time, unfortunately, folks. So hopefully that's given you, even those of you that have used the system a lot, hopefully that's given you some further information of things you weren't aware of. And for those of you that have not seen the system before, hopefully that's given you a huge amount of insight into what analytics can do and the broader Nexus ecosystem as well. Hopefully, if you found the webinar itself quite useful and you want to join up to more of them, we do more than just Demo Day Wednesdays. There are other webinars we host as well. We've got one coming up on Contengo, our command deck solution. So please feel free to register for that one. That's going to be an introduction into a brand new application that a lot of you wouldn't have seen before. So that middle QR code, feel free to scan that for all of our upcoming webinars. You can register for those and you'll be alerted on any forthcoming. Me and my team are very, very active on LinkedIn. We post a huge amount of content, particularly new feature alerts, and anything that we learn from clients in terms of how they're using our applications that we think we should be sharing with the masses. LinkedIn has become a great resource for us to do just that. So please, please, please feel free to link in with me on that right-hand side, and I'll be sharing and reposting anything that my team share on LinkedIn. I post a lot as well, and feel free to reach out to me directly on LinkedIn with any questions as well. But clearly you've got the help desk for any kind of generic questions on our applications. Super. A couple of minutes over, so my apologies, folks. I appreciate I've eaten a lot of your time already. Again, hopefully you found that useful. Thank you very much for joining us, and I hope to see you on a future webinar. Have a lovely rest of the day. Thank you.